Hi everyone, I'm Ken from CryptoTradingKS. If you're new, welcome, and welcome back KS family. Let's run the numbers. Bitcoin currently down 0.3% to 42,074. Ethereum down 1.39% to 2873. From my 30 plus years in financial markets, I explained the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth in the process. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. Today, in many parts of the world, it's Valentine's Day. I just want to wish everybody a very happy Valentine's Day. If you're going through a life pullback at the moment, please know that our community's love and healing thoughts are with you. You're not alone. There's always hope, and the sun will come out again. Crypto technical analysts scientifically track investor attention, and investor attention is measured by price, which is reality, not future promises. We do a lot of things to understand what the price movements are inside the crypto market, and we do that by having very strong foundations, looking at a lot of macroeconomic data, a lot of which I'm going to go through with you today. Understanding how the crypto market is moving, getting the right perception on wealth versus riches, and focusing on creating intergenerational wealth, and then knowing how to buy and sell in the trigger process. A lot of people, when they enter the crypto market, they don't understand Rule 306, and I must admit it took me a while to understand it as well. Self-doubt causes losses. As crypto technical analysts, we go from a position of integrity, decency, and kindness. This is maintaining a positive excellence life trend with a focus on real wealth. That also includes boundaries, courage and honor, fearlessness, meaning inner and outer peace, as well as financial security and intergenerational wealth. Rule 45 is an incredibly important rule. No alt can escape Bitcoin's gravity. It's unfortunate that many investors don't understand the concepts of support and resistance. These are incredibly important concepts to understand. I'm going to bring in a special guest, Percy the Magnetic Price Sheep. Say hello, Percy. Hello, everyone. Oh, that's so nice. Look at that, Percy saying hello. Percy the Magnetic Price Sheep. What has this got to do with crypto technical analysis, you say? And that's a pretty rightful thing to say, actually. For many years, I lectured first and second year statistics, and I thought when it comes to learning, people actually understand when things are fun. So let's use that concept. Let's think about Percy, the magnetic price sheep. He represents price. And what do these lines represent? They represent fences or barriers. For example, when Percy is up here, and he crashes through these fences on this line, where does he come down to? The next fence. This was called support at that stage. Percy tried to rally back because he's magnetized. When he falls through a level, this is like Mario. When he falls through a level, he wants to go back. He wants to jump up, but he couldn't get there. So where's his next position? Coming back to support, but he lost the support and he found another level of support below. And then what happened? That resistance, that one support turned to resistance. It's like a fence. Percy's trying to get out. Percy's trying to jump the fence. He almost made it, but he was pushed down. Naughty people. And pushed Percy down. And now he's trundling along this particular level. This can be a really, really good way of understanding support and resistance. So many people in technical analysis make TA really boring. We make it really fun. It's literally all about what you remember. If you remember and you can understand the concepts, you'll do really well. After all, crypto is an exponential market, which means that it can implode and explode very, very quickly. You need to understand these concepts. What we see is Bitcoin currently trading at 42,053. We'd note a fairly decent support level at 41,933. Where could Percy go next? It's pretty obvious that the next place Percy could go to is to try to get above this resistance line and turn it to support. If Percy does so, that would occur around the 43,017 mark. But what happens if Percy doesn't make it? Percy gets negative and he starts to go downwards. There is quite a solid support here at this 41,457 mark, and if we lose that, there is another support down here at 40,761. That's why we need to draw really good support and resistance lines. One thing I mentioned previously, we need to know how to draw the support and resistance lines. That's through a particular method called the CTKS method, and it's designed specifically to draw support and resistance lines that capture the exponential price movements inside crypto. One thing that happens traditionally when people come from the stock market or Forex, they draw Forex and stock market lines in crypto. This makes a lot of sense because they've come from there. It's a market, it should work. But unfortunately, crypto is incredibly volatile. It is based on exponential price action, and stock market technical analysis and Forex TA, they just don't work inside the crypto market. That's why we get so many people calling for different patterns, and those patterns don't play out. There's a lot more to it as well. Many technical analysts, when they look particularly at crypto, they just sit within the chart, and that is a really bad idea. We must look at outside trends. We have to check the stock market and world events. We need to collect probabilities, but we don't pay a lot of attention to the news because the news is mainly noise. We search the graphs, the charts for signal. Also, a lot of people misunderstand what crypto actually is. I hear it all the time and I'm perplexed. Crypto represents the ownership layer of Web 3.0, the next evolution of the internet. Crypto is just starting its adoption phase. We can see we're really early, and crypto is potentially growing more quickly than the internet ever did. We're going to see a lot of attention given to crypto over the years, and we're really early. The adoption cycle is just starting, and we can see that crypto is a really tiny market, around $2 trillion, compared to the stock market and the bond market, which are orders of magnitude greater. To determine the probability of Percy moving up or down, we have to crunch a lot of numbers. We have to run the numbers, and we have to collect probabilities. This is something a lot of people inside crypto simply don't do. When you have a look at the news, you'll see a lot of things about inflation. You'll see a lot of things about C19. Also, Russia and Ukraine and China, Evergrande, the Great Wall of Chinese debt. You'll also see things about oil. All of this can impact Bitcoin. These factors will actually influence where price goes. If, for example, price stays in this range, where it is now, from 41,933 up to about 42,998, or if it breaks up or breaks down, it's critical to look outside the charts. So how do we actually do that? The first thing that we do is that we look at the market, the US market, because it's so incredibly large. Masterclass students, you will receive this live chart in TM6. We can see the fear level is going up inside the market. What happens as the fear increases? Stocks will sell off, and the stock market is a very large market. Remember this, the stock market is this 119.7 trillion. It's a very big market. The bond market is even larger, 123.5. And crypto is only a baby, 2 trillion. Crypto will get buffeted by what happens with gold, with stocks, with bonds. We need to understand it. We can also see that oil is making its way up very strongly. Bond prices are starting to bounce. Bond yields have hit resistance and starting to come back. Gold is starting to spike. What does this actually mean? This is a really important thing to be aware of. When gold spikes, it's generally a result of increased geopolitical tension. When gold goes down, it's decreased geopolitical tension. Gold loves trouble. No, it's a troublemaker. The US dollar currency index, the DXY, is on its way back up. And it's really interesting because veteran traders will know, and investors, there's often an inverse relationship between the US dollar and gold because it's denominated in USD. What we can see is that the gold price is actually making its way up strongly. This would suggest that something else is at play. We focused on Bitcoin and crypto, and you can see Bitcoin's directional price movement in yellow here. Masterclass students, you will get this in TR23. You can see gold has rallied above resistance, and it's done so strongly. Copper has retraced, palladium and platinum going up slightly, silver coming down, and the inverse DXY coming down. This is an outlier. Gold's behavior points to geopolitical tension, Russia and Ukraine. C19 is also really important to understand. There's currently 412 million cases, nearly 6 million deaths. We see a decrease in the number of new cases. When we look yesterday, we can see new cases are actually lower, which is good, around 1.9 million new cases yesterday. Why do we care about any of this? We're just focused on crypto. Look at the size of crypto. Crypto 2 trillion, the stock market nearly 120, bonds over 120. You can see that the stock market and the bond market will drive investor attention. It's really important to understand how all these things move together. One way that they actually move together, when there is fear inside the stock market, that fear causes investors to risk off and causes prices to go down. The transportation indexes go down as well. Price is always moving in a wave, and this is something to understand. But the issue is here, we can see this white line. This is the airlines index. That is overcoming a level of resistance. It's potentially a reopening trade. That means that the world is going to start opening up again, and about time. This is really good for economic activity. Masterclass students, you will receive this in TM3. There's an enormous amount of talk about inflation. What I've done is to add M1, the money stock, and M2, the second money stock, as well as the federal balance sheet in here. I want to give you an idea of what is actually happening. M1 is easily accessible money. M2 is just a little bit less accessible, but this is what central banks use to control their monetary policy. And what you can see is that, for example, M1 and M2 have been steadily increasing, as has the CPI, that particular purple line, and the federal balance sheet, the brighter purple line, has been going absolutely parabolic. We can see the Fed balance sheet is approximately $8.8 trillion. The money stock, 21.844 trillion. When we look at this thing, this is really important to understand because Bitcoin is seen as an inflation hedge. What we actually are looking at here is the 10-year break-even inflation rate and the 5-year break-even inflation rate. They've been coming down since around the 11th of November, and you know that in the news the Fed has made such a big statement about interest rates, having to increase them because inflation is out of control. What do you see when you look 5 years into the future and 10 years into the future? We can see inflation rates are actually coming down. We literally do not care what the news sources say because they're very sensationalistic by nature. We stack all these probabilities. What do we see? The money stock continues to go up. The Fed balance sheet continues to go up. There's been a market reaction to tightening, and it's almost, you could say, baked in. Masterclass students, you will receive this live chart and this updated chart in TM4. I've done a new chart for you, which is Bitcoin, this level, yellow level, compared to the inverse of the bond prices. I've literally inversed them. I flipped them around. Now, why have I done that? Because, as you can see, the inverse of the bond prices tends to correlate with the directional movement of Bitcoin. And therefore, it's important to understand how these things are moving around. We can see the 20-year plus bond price and the 1 to 3, the 10 to 20, 3 to 7, and 7 to 10. They're all following each other very, very strongly. So we can just focus on the 20-year plus. What this is actually showing us is that there's upward momentum potentially for Bitcoin. We've seen a bit of a uncoupling at the moment, but I believe it will recouple. I'm going to put this out in the next couple of days in LV11 for the masterclass students. What this is basically telling us, Percy has the probability of going higher, because as we look at these bond prices, we're getting a signal that things are not as bad as people would portray in the media. You may have heard talk about the real rate, and this is really important. This is the 10-year return after inflation. We can see that the real rate is actually increasing at the moment. There are a lot of simplistic ways of looking at the market, and after more than 3 decades in the market, I can tell you it's just not correct what a lot of commentators say. And coming from a background of lecturing first and second year statistics actually helps a lot. For example, a lot of people are going to say, with the increase in the real rate, what we're going to see is a collapse in equity markets. For example, same here. The real rate increased. What did Bitcoin do? It increased. When the real rate decreased, what did Bitcoin do? It increased. There is no comparable relationship through here. And in LV12 for the masterclass students, I will discuss this at greater depth. The concept is that when people talk about different associations in the market, please check it out for yourself. Don't just sit back and say, they must be right. Often they are not right. They're not even remotely right. I'll put this as part of our daily analysis. We need to keep our eye on this, especially if we see a very big spike in the real rate. That could signify incoming problems, but we'll keep our eye on things. Please don't panic if you hear negative news. When people are new to the crypto market, they inhabit Zone 1 and Zone 2 of KS Zone analysis. In Zone 1, it's the panic zone. Zone 2 is the blame zone. This is all about seeking certainty. There is no certainty in any financial market. If there was certainty, there wouldn't be a market. Simply, it's as simple as that. Uncertainty, probability is the thing that drives every single financial market, but so many people are promised the earth and they just don't get it because there is no certainty inside the crypto market. As a result, people feel significant stress and have a lot of sleepless nights because they light switch into investments and trades. They tend to go all in or all out. Any negative news is viewed as a reason to go all out. They fall into the certainty trap. They're unfortunately addicted to news, which is often very, very misleading and put together by people who want to sell advertising space, not wanting to look after you. Also, they get addicted to indicators. And indicators can be very conflicting with each other. They want to seek perfect timing, capture everything, and they're absolutely terrified of black swans. In Zone 3 and Zone 4 of KS Zone analysis, these are the probability zones. What we do in here is that we scale into trades and scale out of trades. We buy on the red. We sell on the green, which is typically the opposite of what people in Zone 1 and Zone 2 do. We stack probabilities. We use the CTKS method, which actually allows us to understand and interpret exponential price action. We make volatility our friend, and we have a 10-5-10 fund, which actually captures volatility movements. And we love black swans. There's nothing more profitable in the earth than a black swan. Looking quickly at China, we don't see any stress in the Chinese property market. Masterclass students, you get this in TM5. The Russian stock market is showing a bit of weakness. There could be a risk-on activity, and we can see that reflecting in gold. Masterclass students, you get this in LV8. I wanted to thank Martin Vicina. Martin reached out and wanted to share his war sentiment chart. I'd actually also been working on one, and I wanted to show a few things that I couldn't show in Martin's chart. So just letting you know, Martin, what we're actually looking at here is war sentiment. We can see when the COVID US liquidity crisis hit, everything got hammered. And it's a really important thing to note that we've seen increased activity in the war-based companies. For example, Northrop Grumman Corp, NOC. This company makes stealth bombers, nuclear missiles, and submarines. Wow. And what are we seeing here? We've got a big tick up in this interest. Investor intention investor attention is actually being grabbed by these war companies. I've listed the 6 top defense stocks here. Raytheon Technologies, they specialize in missile defense systems. They have a market capitalization of 143 billion. War is very profitable, unfortunately. And we can see through these particular charts that we're getting a kick up in interest in war. Masterclass students, I'm going to put this together for you. I put a video together for you in LV10 doing a deep dive on this. What does all this information tell us? And it's really important to comprehend how different outside forces will impact Bitcoin's price. Bitcoin is not immune to global activity, not at all. It's so tiny as a market. We can see a lot of stress developing inside the economic system. The probabilities would have potentially us going down to 40,547 or up to 43,458. The more likely probability is coming down to 40,547 at the moment, just by looking at the economic data. But one thing institutions love to do is to pull the rug out from retail investors. That's why we must always make in advance probabilistic choices. Know what you will do and what actions you will take if price goes up, down, or sideways. Bitcoin is incredibly volatile, and the whole crypto market is even more volatile than Bitcoin. Unfortunately, when people are first introduced to crypto, they're not quite sure what to aim at. So they look through and they figure out what the greenest thing is possible, and they just think that will continue to go up. That's like actually trying to fire at a dartboard but being blindfolded and turned the wrong way. Another way to look at it is so many new investors fire off in all directions, hoping to hit the target. Sometimes we pull the trigger on an investment or a trade, and we don't know what the market is doing. All of these things are incredibly, incredibly risky to do. That's why we have a scientific process. We get away from being the light switch of firing first and aiming later, having a blindfold on. We take a very good stock of what is happening. We use the meditative action of marking up a chart with the CTKS method to understand what we're looking at. We look outside the charts to the outside trends. At the moment, it appears that the war-based companies, that the Russia-Ukraine conflict is very problematic, and it could throw negative price momentum into the markets. I know a lot of people talk about the Fed and tapering. I don't really see that as the issue here. It is an issue, absolutely, but it's not the issue. The issue is, in fact, Russia and Ukraine. But we always know that opportunities reset daily. So we look at the crypto market with a timing view. We're seeking to aim. We understand real wealth, and we're not emotional about things. And we understand how to place orders into the market, how to buy and how to sell. But of the two, the more important one is how to buy and how to make volatility your best friend. Looking at the crypto fear and greed index, we're currently exhibiting fear. and 46 out of 100. It was 44 yesterday, so people are feeling slightly more optimistic today. And you might notice that when we have incredible levels of fear in the market, in the crypto market, this is the absolute ideal time to buy. It's when most people are actually selling, and that's simply because they don't understand crypto technical analysis. Turning to Binance derivatives, we can see Bitcoin is under negative price pressure, Ethereum under substantially more. And when we look at the positive movers, there's really not too many. SHIB and Doge, the meme coins, have got a bit of an investor attractiveness, but it's very low. And we can see some sell-offs in Gala, Theta, LPT, HNT, a number of others. It's critical to remember that no alt can escape Bitcoin's gravity. If Bitcoin goes red and goes really red, it will pull the entire crypto market with it. About 1% of alts can escape that gravity, but they can't generally escape the directional movement. Turning to Bitcoin options, we can see that the put-call ratio is 0.68. This is very bullish. Total open interest 34,192.8. We can see a lot of call options. This basically says that investors and traders are expecting Bitcoin's price action to improve by the end of February, and some have placed bets, literally bets, that it will go all the way up to 140,000. The max pain price, where the majority of options expire worthless and cause maximum pain to option holders, is $41,000. Everything we're doing here is stacking probabilities. We must stack the probabilities. We can see short term, from a macroeconomic level, there's a degree of turbulence, especially war-based, but we can see inside the crypto market, the outlook is positive. We're going to look through the top 40, and what we're going to do here is to understand a couple of things. What is strong? What is weak? What is being backed up by support? What is heading into a resistance? What's actually following Bitcoin's gravity? What is diverging? Bitcoin's gravity is this blue line. I'm just drawing up support and resistance lines for you to give you a bit of capability to look at the market through my eyes, how I look at the market. Let's have a look at Bitcoin. Bitcoin is coming into a support level just through here. The next resistance level up is 47,658. The below one, support below, is 37,006. Looking at Ethereum, Ethereum is actually withdrawing, coming into a support line just below it, but I'll just give you the high and the low. 32.68 above and 25.92 below. Binance coin, I won't read all these out because there's 40 of them, but I just want to give you the basic perception. When you look through these charts, you'll see some things actually at better levels than others, overcoming particular resistance levels, and that's really important. That's what we are actually looking for to time the market. Okay, let's have a look at Binance coin. We can see Binance coin following Bitcoin's price action. XRP is looking quite healthy. It has a support level below at 76.29. Cardano basically on a support level at the moment, as is Solana. We can see AVAX has a resistance at 92.24, support at 63.96. All of these are on 4 hours. Luna is currently 52.15, support level 48.20 and above 58.06. Crypto trading and investing is not a certain activity. It's all based on probabilities, and this is really important to understand. If you want a certain return, the only certain return you can get is literally from the banks or very, very low interest bearing accounts. That is not what crypto is about. Crypto is so incredibly volatile. You can do very well from it, but you must understand the volatility or you'll have a lot of sleepless nights. Let's have a look at Polkadot. It's nearing a particular support level at 18.04, resistance above 22.41. We can see Doge, support 13.94, resistance above 16.08. SHIB has been showing a lot of power, but it's actually moving with Bitcoin's directional bias. This is really important to understand. You'll see the majority, about 99% of alts, will do exactly this thing. We can see Matic coming into a very high level of support at these particular levels. This is potentially something good to enter into. Now, why is that? Why is Matic good to enter into? Why shouldn't we go for something like SHIB? In truth, you can go for whatever you like, just so long as you know what you're doing. When we actually see big price movements down and we understand the particular crypto is strong by its own nature, we want to buy at levels of support. They're like the fences that catch Percy. Percy gets caught up in the fences. Very hard to go down. It can happen, of course, but these fences act as magnets, and we want that. We always want to buy when price is decreasing, not when price is increasing. Unfortunately, zone 1, zone 2 behavior buys on the green, sells on the red, and you only have to do that so many times to get completely shaken out of your account. Zone 3 and Zone 4 is completely different. It's all about buying on the red. The redder, the better. We want to go after these things. We just seek to get them at support levels down. And we know we're not always going to get the absolute bottom, but we don't care. We've got generosity and we have probability as well. So we don't care about these things. When looking at Matic, we've got two support levels, 1,644 and 1,516. CRO is looking actually quite good as well. We have lower levels at 43,177 and 37,328. Litecoin is following Bitcoin, and this is really important to understand. Bitcoin and Litecoin just hang out together all the time. They're friends. Chainlink. We can see Chainlink had some divergence here. Divergence is really important to look at. When we get divergence out of a particular alt, it can tell us a story of strength. But also, please be aware that Bitcoin's gravity is really, really strong. It will pull the alt back sooner or later in the directional movement of Bitcoin. Having a look at NEAR. NEAR is very close to its support line and it has a couple below it. We always place our buy orders at seriously offensive levels because we know Bitcoin and crypto are so incredibly volatile. We can get downward movements like this that then reverse. They're very profitable to trade. Looking at the next date, we can see Uni following Bitcoin's gravity, coming up to a support line. Decentraland Mana also coming up to a support line. We can see Cosmos, Atom, looking pretty interesting actually. It's coming up to a support line and it has another one below it. We always think about Percy getting caught between the fences and going backwards and forwards. That's why Percy is a magnetized price sheep. Price is magnetized to support and resistance levels, and you can see it all the time. You can see, for example, Bitcoin Cash magnetized to a support level and then becomes magnetized to resistance levels. This is really, really important to understand. Algo, looking a little bit unfortunately weak here at the moment, selling down. FTT or FTX token, looking very interesting, but we never FOMO into any trade or investment. We have our levels of support, buy orders at levels of support down or in between them, and we wait for price to come to us. We're a pretty chill community. Stellar, sort of midway, well, not midway, mainly down towards a support level, resistance above at 25.90. Ethereum Classic, we can see a support level at 29.90 and a resistance level at 37.78. Looking at the next day, we can see SAN coming into a level of support at $3.9544 and a further level down at $3. We can see Axie Infinity almost down to its support level of 50.54. ICP support level 1982, pretty much where it is right now. Resistance level 23.89. ICP has been very weak for a very long time, unfortunately. VET coming in to a support level at 52.31, resistance above 68.04. Theta token coming into a support level at 2.921, resistance at 4.190. Filecoin has also been quite weak, and we can see it following Bitcoin's gravity. EGLD has shown a lot of strength, but we do not FOMO into any particular crypto because we know price moves in waves. We know price is also negatively biased, and when price moves down, it can move down really, really sharply, like you see in Tezos. Here back in EGLD, ICP, it happens all the time. You don't generally ever miss out, although it may feel like that. So EGLD is looking quite strong, but it's pretty much at a resistance level. So that's one thing that we have to be aware of. Tezos, lower support at 2.893 and 3.764. Resistance at 4.566. Looking at the next date, we can see HNT following Bitcoin's directional gravity. Support level at 22.52. Sushi is pretty much at a support level right now. We can see IOTA coming back to a support level at 79.05, rejecting 104.77. EOS coming back to a support at 2.11. Flow support level at 470 and resistance at 895. We can see Harmony 1 coming into a fairly solid and substantial support level at 17572. Aave support level at 147.20. Gala coming into a support level at 19227. The resistance above is 37.498. The critical thing to understand in crypto is Rule 4, price moves in waves. And those waves can be pretty big. We want to be like this particular person, just ride the wave. Many times retail investors and traders get caught off guard by these wave movements. They're so big. That's why I always urge you to buy in layers down at support and make in advance probabilistic choices. Know what you will actually do if price goes up, down, or just sideways. Looking at the community favorites, we can see VRA, Veracity, is literally just at a support level, and we can see Icon very close to support as well. Rose has a lot of support below it. Typically we want to see this. The more support below, the more trouble Percy has in going down. That's what we're all about. The more fences below us, typically the better, and the more fences above us, typically the worst when we're actually looking for positive price action. We can see waves coming into 871 as a support level. LRC coming in to a support level of 84.83, a lower one 72.98. Don't forget that crypto can turn around in a heartbeat, and it does exponential price movements. That means it moves up really, really fast, like loop ring. Just like this, it can go up the wall, come down the stairs, up the wall again, come down the stairs again. This is what we see all the time in crypto. YGG coming into a support level at 2.952. CHR, fairly nice support level at the pretty much the current price of 49.19. CRV coming into a support level at around the current price. Don't forget that these particular support levels, they're not etched in stone. It is possible for price to go below it and then come back above it because they're magnetized. Previously, we looked at Rose, and the interesting thing here is you could see there were levels of support forming underneath Rose's price, but we left our buy orders in the market. That's because Crypto is so incredibly volatile. It can look to be going up, but in fact reverse and go down. And we know these percentage movements are actually what we want. We always want to buy at lower levels of support because that changes the whole dynamic of the returns. For example, buying down at lower levels, if we actually were at this particular price and got a rally back to this particular high, previous high, that would be a 72% increase. As price goes down more and more and more, and we accumulate more and more and more on the way down, it actually increases the overall return. You can see from this point up to the previous high is 114.67%. Even if it was to go down lower, you're always lowering your average buy price on the way down. From this level here up is 158.15%. That's why professionals have no problem with buying when there's blood in the streets, including their own. I'd like to thank the very kind and generous community members who've reached out and bought me a coffee on buymeacoffee.com/CryptoTradingKS. Thanks so much, everyone. I'd like to thank especially Rundle Ridge. Thanks so much for all you do, Ken. You're a blessing. I wish you a wonderful day. You too, my friend. And of course, to all the community out there. Vicente, thank you very much, my friend, for your kind generosity. Thank you, Ken, for the training and information you give us. We realize that patience is a key factor in the crypto world, but difficult to get in a society that will accelerate us 24 hours a day. So true, my friend. Crypto patience is really, really important. It takes time. From a macroeconomic perspective, the Russian-Ukraine crisis could cause a bit of negative price momentum and a potential slicing through of this fence to come down to the 45.47 mark. If that happens, we're looking at quite a lot of support through this particular price range. Don't forget that what actual smart money and institutional investors do is they create a certainty, a particular certainty level inside the market. It's got to go down, it's going down, and then they promptly reverse it. Be aware of the games they play. They play a lot of games. I hope you found the content useful. Please consider sharing and liking this video if you think it will help others. If you would like daily updates on price movements in the crypto market 7 days a week, 365 days a year, please subscribe to YouTube. Thank you to our moderators for keeping our community safe from scammers and the CTKS ambassadors for mentoring masterclass students. I've left helpful links in the description of this video, such as the link to the masterclass. If you come across to www.cryptotechnicalanalysis.org, you can see the CTKS ambassadors. They have the highest honor in crypto technical analysis, and you can get in contact with them just by scrolling down here. Pressing this button will take you to Twitter. They can give you 80% off the masterclass price. If you go to the testimonials section of the website, you can see a variety of different testimonials that have been given in response to the masterclass and how various people have found it going through it. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.